the Pro Desk. Good afternoon. Sorry for the delay, technology issues. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please take the time to pause this video, read through this full disclosure. I greatly appreciate it. And position disclosure, newest position for anyone that follows on YouTube is Tell. Started nibbling on this a little bit. I'm not that heavy. I have a game plan for if it goes down to buy more as it builds out and consolidates in front of $5. So I guess that's the newest position, and then nothing else new with the other ones. Still, relatively the same size there. Haven't added. But still in them for sure. So, market today. Title of the video today, I basically titled it Bulls Make Their Stand, but the range markets continue. So for the past, it's like a week and a half now, really. So 1, 2, 3, 4, 5, 6, 7 days. Markets have been in this tighter range between, you can call it 410 and 415, but if you look at the tails, it's really like 407 to 417, 407 to 416.50, where in range-bound markets today, I think Rich answered, that's kind of like Rich's term that he used, the boho algo flip. So honestly, I would ask Rich, that's really his term that he uses. But so, market today, again, range-bound trading, in a range-bound market. Today's a perfect example of what range-bound markets do. So when you're in a range, you get to the top of the range, things look great, things look like they should continue, things look like they should break out, and then you sell back down. And then on the flip side, you get to the bottom of the range, things look ugly, things look like they're about to spill over and, just fall apart completely, and they get bought right back up. So this morning, we were all, I think feeling a bit nervous. We're kind of like excited nervous. I wasn't really like scared per se, but I was like excited nervous for a potential of a gap and go to the downside. So coming into the market this morning, SPY was gapping down. You can see we closed not too well yesterday, but above 410. Again, it wasn't a great close, but it was closing above support, closing above the level that's really important for us, which is 410 for support on the downside for now. Really this range, support area, for the most part, every time we've gotten below 410, we've been able to close above it. So this close was pretty much at 410, but other than that, always a close above 410. So markets closed like mid 411s yesterday, and we were gapping down decently this morning, again around like 1% or so, where we opened pretty much right at 408 this morning. And it was a pretty important day for both the bulls and the bears. In terms of, market is probably going to move today. It's probably not going to be, just like a super tight inside nothing to do day. But it could go either way. It definitely, as much as like we were saying we were nervous this morning, I hope that didn't paint, mess anyone's game plan up or get them in the wrong mindset of, market's like definitely going to puke today. Because this is a range. Again, range-bound markets are range-bound markets until they really do break out, and usually it's like the close that matters. So I usually talk about, highs and lows are important, but open and close is just as important to me. Open and close levels are just as important to me as high and close levels. So again, we haven't really closed below this 410. Is today going to be the day? So coming into this morning, we're nervous because we're opening below support. We're opening below 410. So what's the game plan? We like to talk about, if this happens, then do that. If that happens, then do this. If this happens, but then this happens, maybe do this, but then switch and do that. As traders, and someone asked me a really good question today talking about, if I have like a bearish economic, feel like a bearish feel for the economy going forward, and I'm not super bullish on the economy 6 months down the road, how do I prevent that from, you know, messing up my trading? And really, like, the simplest answer is you just can't think about it, especially if you're really only day trading. You know, it's one thing if you're managing a portfolio and, you know, you're managing bigger money and stuff like that. But if you're really focused on trading, you know, I like to think of traders as like, you know, I can never really think of like an animal. So I think of like ninjas. Like, you're not like, traders aren't moving the market, right? Like, big money is moving the market. Traders, you know, whether it's us at T3 or whoever at whatever firm, or, you know, whatever on you know, when people talk about the Robinhood retailers are, you know, moving AMC, like, no, they're not. Maybe they're helping a little bit, but no, they're not. You know, traders are not really moving the market. Big money's moving the market. So, like, I like to say, like, a ninja, because, like, we're just, like, in the background, like, in the dark, and, you know, we don't have, you know, we're not going to bottom the market, we're not going to top the market with our size, but we can be there to be in the middle of the action and, you know, take our money from the market where we can, right? Like, that's what we're doing. We're taking money from the market. I say I can never think of an animal, because, like, you don't want to be a bull, you don't want to be a bear. You know, I don't know, what do you want to be, like a rabbit or a kangaroo, or, you know, something? That doesn't sound as cool, though. But so it's really just all about price action. And, you know, what is price action? Let me simplify it for you even more. It's all about just your levels and respecting your levels. I've been talking about that throughout this whole downturn, really, where, you know, just know your levels, know your important levels, your important S&P levels. If you're above them, you're good. If you're below them, you're not good. If you're below them, but then you go back above them, you're good. If you're above them, but then you go back below them, you're not good. Like, it really is that simple. It's easier said than done, especially, like, intraday when the market's moving. Like, you might know that, you know, SPY 410 is your level that you need to be paying attention to. But then intraday when the market's moving, so here's our gap down this morning, here's 410. It's not like we're just like, okay, back above 410, you know, straight up, or, you know, right up to 410, and then, you know, 409.99 holds to the downside, and then we go right back down. The market's not a perfect place. It can be very irrational. Shakeouts happen all the time. The market is a very frustrating thing. It tries to frustrate as many people as possible. That's, you know, markets bring max pain. That's just, like, kind of how it goes most of the time. Not always, but most of the time. So, you know, what's the point of all me saying this? I guess, like, the lesson for today to take, you know, for what I want to take away from today, what hopefully some of you might be taking away from today, is, again, just keep it simple. Know your levels, know your game plan. If this happens, then do this. If that happens, then do that. So, what was the morning game plan coming into this morning? When we're gapping down about 1%, we're gapping down below support, you know, it looks like it's the day for the bears to step in and prove themselves. That doesn't mean it's definitely going to happen. That doesn't mean they have to do it. You know, you listen to your technicals. You watch your technicals. You watch your price action. But technicals can change in a day. You can look really bad, and then the technicals can change after a day of price action, and vice versa. You can look really good, and then after a gap and a day of bad price action, you can look really bad again. So this morning's game plan was gapping down 1% or so. Definitely possible for a gap and go to the downside, but it's not it's not impossible for them to buy it back up through 410. And we specifically said if they're going to do that, they really should do that early on. You know, maybe not right away straight up, but in the first, like, half hour to hour of the day, they should either, if the bulls are going to make a stand, they should buy us right back up through 410. Or, you know, we might shake around a little bit, pivot, you know, break new lows, not really break back down. But then probably within the first hour of the day or so, you know, trade back up through the day highs, make a new intraday day high. And again, back above 4,100 for the S&P, 410 for the SPY. You know, and then on the flip side, for the bear side, these big gap and go days to the downside, you know, there's one right here, one right here, one right here. Definitely one right there, definitely one right there. And even the other day right here, which this ended up being kind of like a calmer inside day for the most part. But this was a decent gap down. We ended up selling off that day as well. Know like what your price action should look like. Like if, the market's not gonna, and like going back to the question that was asked earlier to me intraday, when someone, was saying, oh, like if I have a bad economic outlook, like how do I stop letting that affect my trading intraday? Like the market, and the market's not gonna open up one day at 350 because the market makers realized they were valuing their PEs wrong or something, and they need to reset the S&P PE, so they're going to gap us down 20% one day. Like that's not how it works. And then even intraday, when things bottom, when things top, when things trend in one way, when things trend in the other way, when things trend one way and then it, V bottoms or W bottoms or whatever, and then starts trending the other way, there's only so many patterns, there's only so many ways that can happen. It comes down to simply, a candle there's only three things a candle can do. It can stay inside, it can go outside, or it can be engulfing and go outside and then back outside on the other direction. But there's like literally only so many things that can happen. So same analogy to S&P one day, gapping down 30% because the market makers got the valuation wrong. Like that's not how it works. And same thing intraday, like, we're not going to trade up and then, they're going to halt SPY and say market makers, are valuing the market wrong or something. And then, the SPY is just going to like gap us down huge, something like that. It's, price action leads us that way. So what happened this morning? Big gap down. We know our scenario. Again, if bulls are going to be strong, they're probably going to buy us up pretty early. They should buy us up pretty early. And if bears are, on the flip side, if bears are going to be strong, we know that they should probably more time correct than price correct this gap down. Moving averages come down. Usually, I would bet $1. I don't want to bet too much money because I don't know, but every single one of those gap and go to the downside days, the first 5-minute bar was red. I remember it. I mean, I don't want to bet on it because I could be wrong like one of the days or something, but I remember how those days started. And this comes from just, I don't even want to say like experience, but just like doing your end of day review and, looking at the market every day and saying, what did the candles look like when this happened? What did the candles look like when the 5-minute moving average caught up and then the gap was filled and that gap extension, was satisfied? What did it look like in the beginning of the day? And like over time, you just see, there's only like so many patterns that can happen. Like you're not going to like have a pattern like this and then, it just like gaps down here for like some reason. Like, it could turn back lower, it could make a higher low, it could come back double bottom, it could open, drop down, V bottom, but like there's only so many scenarios that can happen. That's just how it is. Again, a candle can be inside, it can be outside, or it can be outside on both ways, but there's only three things a candle can do. It can't do anything more than that. So knowing kind of that background, that edge, that scenario of, okay, if the bulls are going to be strong, they should probably do this. If the bears are going to be strong, they should probably do this. And then whatever happens, you just do it and you just follow it. And, again, it's just like I like to say like ninja because it sounds cool, but it's kind of like you're a fly on the wall. Like traders aren't moving markets. It's big money moving it, and we are not big money, whether, you think you are or not. But you don't have to bottom the market with your money. You don't have to top the market out with your money. You just got to be somewhere in the middle to take your money. You just got to be somewhere. You just got to catch some action in the middle. That's all you got to do. So, long story short, what happened today? The bulls definitely made their stand. It was a bullish scenario right away. What were some of the signs for that? One, things got bought up right away off the open, which is not, that's something we've seen before. Market opened up, SPY got bought up right away, pretty much price corrected right to the ADMA on the 5-minute chart. What were some of the underlying signs to help that? I think Apple was one of them that got bought up right away. We were looking at some of these FANG names for possible shorts, in case the market was going to be weak. Like on a day like today where, we're saying in the morning, looks like we could break down, but it's not impossible for bulls to just take us back up and close above support. And once again, we don't get the close below support. So, if the market's weak, you can look at these types of plays. And if the market's strong, you can look at these types of plays. So like this morning, Apple's, pretty weak pre-market. This 144 was really the level that we were looking at on the short side. You can really just kind of see it. You could argue it's like 145 to 144 area, but pre-market, Apple was banging its head down below 144. And, below 144, everyone from these past days is out of the money. Below 144, you're starting to, dive back into this run up where, we basically ran up from like 140 to 145, consolidated 145, but all those people are starting to be out of the money. So Apple 144 on the short side. Well, what happened? Apple got bought up fiercely. Was green within the first like 15 to 20 minutes. That's not, if we're going to have a day of strong selling, which is what happens when you have a gap and go to the downside day, like that shouldn't happen. So once you see, and the other one was IWM, which we've been stalking all day, every day for not necessarily trading purposes. I've been saying the makeup of this ETF is garbage, but it's been a great risk on, risk off, like kind of sentiment gauge. When the SPY has been looking okay, but the IWM looks like trash, the market hasn't really had any follow through, and vice versa. When the IWM looks great and the market's, you're not so sure about the market, but, the risk on, risk off sentiment gauge, aka IWM, is telling you risk on. That's kind of your helpful signal there. So SPY got bought up right away. Apple got bought up fiercely right away, which, if we're going to sell down, Apple's probably going to sell down all day today. They're not going to buy it up fiercely off the open. And IWM, same thing, SPY, bought up right away off the open, going green within the first half hour of the day or so. So while IWM's going green, SPY is battling this 410, SPY price corrected, but usually the first time you get some type of move off your equilibrium when you catch up to it on a gap, whether it's a gap up or a gap down. But once you get this, you get pushed down, you come back up. If you're a bear, already you should probably be nervous seeing this, seeing Apple, seeing IWM. You should probably be nervous in the first 15 minutes already if you're a bear. And you're really your kind of only hope is just, maybe a tail down off here. But you really need this to sell back down. So you're probably already nervous in the first 15 to 20 minutes or so. And then you get this, you get these two tails off 409, and then 410 is the big level. Back above 410 here, back above your moving average on the 5-minute chart, which again, you should have really, going back to what should happen on, this type of day versus this type of day, our gap and go downside days almost always just ride the ADMA down for a long time, the first half of the day or so. And then maybe, by lunchtime or some time in the early afternoon, you finally get that 15-minute correction where you correct to the 21 on the 5 or the 15-minute ADMA. But usually, just knowing little things like that, you usually ride the 5, down days, downtrend days are ugly. You usually just ride the 5-minute ADMA. So once you fail off here, but then come right back up and bust through the 5-minute ADMA, you get back above 410. I mean, that's it. That's it for the Bears. That's it. Maybe you bust back up and this is another kind of shakeout for the Bears, and then you come back below 410. Well, okay, then you're back below 410. Then you can argue for the Bears again. But know your levels, keep it simple. Back above 410 right here. That's it for the Bears. And not only is that it for the Bears, but that's great for the Bulls. So as traders, you should be flipping long. Way, way, way easier said than done. But that's why I really try not to develop biases on a day I really try to just be like, if the Bears are going to be good, they're going to do this. And if the Bulls are going to be good, they're going to do this. Bulls want to see this, Bears want to see this. I really try to never develop a bias because, just over the years, you see it, day after day where, something looks great and then like the complete opposite happens. So Bears definitely could have taken us down today, but Bulls bought us back up. Within the first hour, we had like all clear signs as well. So back above 410 here. That was it really. And we spent the day trending up all day. And, whether this was half real buying, half a squeeze or more a squeeze, this and that, that's like a whole nother argument or a whole nother conversation to have. But I really wanted to, and I know I kind of just like jargoned on a little bit there, but really just talk about it. And it's more like even me talking to myself out loud, because I'm just sitting in a room alone as opposed to talking to you guys too. Because like it's one of those things where like what to do, what the right thing to do is, and you just got to do it. Keep it simple, stupid is obviously a great phrase that we all like to use, but above the level, you're good. Below the level, you're not good. Like it's as simple as that. So that was the market today. Market held support, reclaimed support early with some early signs to help us tell that was going to happen. And now we're back at the top of this range. So that's what the market did today. Going forward, what can we look for tomorrow? Well, now we're at the top of this range. We mentioned, 410 to 415, but it's really, if you want to include like tails, it's really like 407-ish on the downside and then 416-ish on the upside. So now we're back at this 416, but what they say, what they say about support and resistance levels, the more times you test them, the more times you break them. And that's why I think we were a bit nervous for 410 this morning, because, this is the whatever fifth time that we're testing it. But now it's the same thing for this resistance. Now this is, over here we're extended into it. Over here we're not as extended into it, but we fail it. We fail it again. Now here we are again. The more times you test this, whatever level, both on the upside and the downside, it's just kind of a true general concept. The more times you test the level, the more times you're likely to break it. These moving averages didn't cross down. 8 is sloped up, 21 is sloped up. We're testing resistance for the whateverth time now in a row. Bulls look good here again. So going forward for tomorrow, we'll see how we gap. I wouldn't expect a big gap down. Anything's possible though. You always got to say to yourself, like, anything's possible. Like the markets, and I've seen it, I'm sure you guys have seen it too. Like a market could look perfect and then just get destroyed the next day, and vice versa. A market could look so ugly and so ready to break down and then just rip the next day. Like it happens. Anything can happen. Nothing's impossible. So be ready for anything and be ready for either scenario. And there's certain clues that you can take with you to like have an edge, obviously, because you don't want to just be flat all day for the most part. If you're day trading and you're newer, that's one thing, but it's much harder to make a longer term run at this just being flat every single day. But that being said, bulls definitely have more of an edge right now. We're testing resistance for, again, whatever, like fifth time in a row now. So let's see if we can get follow through tomorrow. Definitely important for the VIX to head lower. Definitely important for the bond market to keep chilling out. Yesterday was a little scary for the bond market, and I think that scared, bond market's more important than the equity market. So I think that was a little bit scary. But bond market chilled out today. Let's see if that can keep chilling out. And the dollar chilled out today after almost breaking out again. But same thing on the top side of its range. Looks like it's going to break down, goes back up. Looks like it's going to go up, goes back down. Back to the top of the range today and back down. So dollar stays chill tomorrow. Bond market stays chill tomorrow. Equity market should be good for tomorrow. If that happens, this happens. And then on the other side, if those markets don't chill out tomorrow and they start to, get worrisome again, then equity market's probably not going to be so great. That doesn't mean we have a huge down day, but it just means this ceiling of resistance that we keep running into is probably just going to keep holding, and we might just have like, a candle that looks like this or this tomorrow right here. So yeah, that's all I really have to talk about. There's definitely more I could talk about, but like I said, I have something to do at 5 for the incoming. We do like a classroom now for the people taking the Series 57 twice a month, like on the first and third Tuesday of the month, because we're trying to help you guys. We want people to pass their test faster. It's just, better for everyone. But so I do have to stop before 5 so I can get ready for that. So if anyone, I definitely could talk about more. I could talk about energy and stuff like that, but I thought I would just kind of talk to you guys about that instead. So yeah, anyone have any questions, comments, concerns, complaints, compliments, anything like that, definitely feel free to share them now. I'll scroll back up as well. I saw you guys chatting a bit. So let me scroll back up to 410. Let's see, I'm just going to read the chat here for a second. Go Bolts tonight, game 4. Go Celtics as well, game 3. Can I explain? Oh yeah, Rich N, can you explain? Is Rich N here? Yeah, it looks like Rich N gave you an answer. Shout out Rich. He's probably the nicest guy on the team. Raccoon. There you go. That's a good one. I couldn't think of an animal, but that's a pretty good one. But yeah, you don't want to, you want to be like off the side and just take your little bits in the middle wherever you can. Not to say that we don't try to buy the bottom or short the top, but like, I think you guys know what I'm trying to say. Fox. Gabriel's Fox, that's funny. Scrolling down. Yeah, IWM has been a great risk on, risk off gauge, for sure. It's been, Derek's definitely been calling that pretty well, and I agree for sure. I like to, it's a great like risk on, risk off gauge, but you still want to buy, your tier 1 names. You don't want to buy, the garbage names that are in IWM like AMC. Not to say you shouldn't day trade AMC for like a day trade or something like that. By all means, go for it. But that's not quality. So. Scrolling down. Is there an index for the bond market? So I just look at TLT, which is the 20-year. It's probably the most liquid ETF for, to look at. It's the 20-year. I'm sure a bond nerd would yell at me and think I'm an idiot for only looking at the TLT, and I should be looking at the 2 and the 3 and the 10 and the curve and blah 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 and everything like that. But just for like a kind of like a quick look of, are rates up or down? If the bond, and if you don't know, now you know if they're inversely correlated. That's like Finance 101. Bond market's down, rates up, vice versa. Bond market's up today a little bit, so rates are down. Seems like, I think 3% is where the 10 years at. This like 3%, it's kind of been chopping for a bit now. TBT is the opposite of this, so this is short, the 20-year. So I guess this is like the opposite. But yeah, TLT, just kind of like a general gauge for the bond market. Which again, the bond market is more important than the equity market. There's a lot more money in the bond market. That's why they say That's why your granddad finance professor will tell you that bond market is the canary in the coal mine, and honestly, it's pretty true. And it's true, even like Derek was talking about in the afternoon meeting yesterday, this bottomed and bounced and chilled out before the market did. Many a times we've seen it where, and even back when this whole drop started, I'll bet, like, let's see, where did this start? Like December. Yeah, TLT. Oh, what did I just do? Even this drop, like this whole fierce drop in TLT that really only gave these short bounces this entire time up until the past few weeks. While the market fell out of bed here, gave a really nice bounce, and then people were thinking it's okay. And even up here, actually, this is where I think this is infamously where Kramer, who the poor guy, been getting things a little more wrong than right lately. Kramer was basically like, we're out of the bear market, like on this day right here. Again, the poor guy can't catch a break lately, it seems. But he's saying we're out of the bull market right here. Kramer should have got Finance 101, because the bond market's still falling apart and not chilling out at all, while the equity market is just being like super volatile. And vice versa, same thing on the downside. Equity market looked pretty bad, but the bond market chilled out before the equity market did. So it's just a good thing to watch and get a gauge on. Don't stare at the TLT all day and make day trades based off the TLT, but more just kind of like a, bigger picture sentiment to watch. And again, this is the 10. I think there is like I don't know if this is a 10-year ETF. There are other bond market ETFs, but in terms of things that are liquid, aka they trade a lot of volume, and you can take size in it and not move it. That's TLT is probably the best one to watch. Oh yeah, true. And then that's true as well. So this is like just rates in general, I guess more like rates, but then like actual bond market stuff. I saw Rich mentioning J&K. So yeah, high yield. So J&K is one you can look at. HYG is another one you can look at. LQD, which is investment grade corporate bonds, one to look at as well. This one was also giving us a lot of worry for a while. I mean, this was just bleh, like this whole time. And then finally this thing bounced a bit and it's chilled out. And I'm sure that's what all of them really look like. Yeah, just absolutely puking for a while until finally we got a bit of a bounce here. Finally. So yeah, I guess you could almost look at those for like the bond market, but just like rates. I mean, kind of in general. Rates again. The 10-year 3%. This like big 3%. It's been chopping around. I think it got above 3% yesterday, and then now today it's back below 3%. Or I would bet you would argue this is probably a trend that should continue lower, but we could definitely just keep chopping in this market, range bound. Even like the note today I posted from Mike Wilson, Morgan Stanley, who's been bearish and been pretty good with his calls, was basically saying they think the S&P could go down to like 3,400 by the end of August. He didn't say S&P is going to crash today. He said, if you read the note, he said this bear market rally could last a couple more weeks, and more so in a kind of sideways chop way than back here when we had this like rip to 4,600. We definitely could get to 43, 4,400 would be pretty tough resistance, but he didn't say like we're going to crash at 3,400 today. He said, this could last a couple more weeks, another week or two or whatever, of kind of like this sideways choppy before like the next leg lower, which he's thinking gets triggered if not by anything else, earnings season coming around and earnings getting revised to the downside. But we do have an inflation number this week as well, which the more we rally into that, the more nervous I would be about that inflation number versus the flip side. I think one of these we had a day recently where we sold off into the inflation number, and then inflation like wasn't at, I don't think it was the last one, maybe the one before that. But the more we rally into the inflation number, the more I would be nervous about it. But that's for another day. That's on Friday, so we got a couple days left for that. Let me just check YouTube real quick and see if there's any questions. Otherwise, I do have to wrap this up. YouTube guy is saying he's moving the market with a smiley face. Obviously he's joking. And yeah, poor guy, Kramer. I know. I can't help but feel bad for him. I'm like, you know, it's not like he's like totally stupid, like obviously. But just, yeah, you just can't catch a break lately. Thoughts on oil at the end of the day push? So I'm not sure if you mean, so oil, the pits close at 230, right? So I don't know if you mean like this push or just this in general. Just strong with the market. Commodities are super strong. And I've been saying really for a couple weeks now, and then this big 82.50 was the big level for USO. This USO oil chart, I've been trying to say, hopefully I've said it clearly, looks dangerously good. Dangerously good. You had this big parabolic run, big parabolic run. Parabolic trend finally breaks, which they always do eventually. But this could not have consolidated any prettier in a more perfect ascending triangle, ascending wedge, whatever you want to call it. It's, I've been saying, or trying to say, it looks dangerously good. It still looks dangerously good. It looks like it's starting another, whether it turns into a parabolic run or not, it definitely could. It definitely looks like it might. But it looks so good. It looks dangerously good. And it looks like it could go parabolic again. So my thoughts on oil for the end of the day push, I wouldn't think too much about it at the end of the day. Actually, Brant from our VTF made the point today too about how these ETFs, USO and I think Nat Gas, which you couldn't even really see it too much in Nat Gas today, but they're like rolling out their futures contracts, so that can sometimes affect the ETF action a bit, even though the underlying commodity, it doesn't really matter for the underlying commodity. It's just like the structure of the ETF in general. So I don't know if that's what caused this oil down move or the intraday weakness. But end of day push, it looks great with the market. We could get into a whole nother chat about if oil goes parabolic again and gas prices start really, really ripping higher again, and inflation, and is that going to be good for the market, and does oil start to deviate from the market again, aka like oil goes parabolic and market starts to go down perhaps, but that's a whole nother talk. So oil looks great, the daily chart looks great, it couldn't look better, go energy. Go Stefan. So I think that's it. So yeah, I gotta wrap up. Thanks for listening to my spiel. I hope it helped. And for tomorrow, we'll see how we gap. Bulls look good, but we're back to the top of the range. So, do they look good? And then we just do nothing tomorrow. That wouldn't be all that surprising. But bulls look good. So we'll see how we gap tomorrow, and we'll go from there. Have a good night, everybody.